Now the next strategy is quite an interesting one. Uh, it's not strategy, of course. It's more of a approach to the execution, as I mentioned. But for that, we need to understand the strategy as well. So the strategy remains as we have been doing the for ICT concepts uh, with based on the SMC principles, the fair value gaps, the key fair value gaps, key daily levels, key weekly levels, the time price opportunity levels, like the other levels as well. So what we need to know then is firstly the levels. Obviously, let's mark October end. Let's mark November end, and sorry, okay, and then we can be sure that about the levels. So this is value area high, value area low. This is value area high uh, from previous month, and obviously it did not go there, so let's forget about that. And then yeah, obviously this is what we want to trade, and these are the key levels. Obviously we saw the fake breakout above that, and again here as well, and then price came down. So that's all fine. So these are what are our key levels from October. The key level was around 153. Then our key level, the next key level for us established in November was the 156 uh, for December. So for at the start of November, we are having a breakout. We are having a breakout, and we have a key support level that is giving the price support. Obviously, as we can see, is giving the price support because we have confirmed the breakout by end of October. At the start of November, we are having a key support around 153. So that's the level we should be marking. Then, when coming to December, we are marking a key level uh, around the value area highs, which is obviously 156. Whatever happened in this month, 156 remains the key level. And but we saw almost 100 pip breakout from that level, and we had to wait about that. And uh, there was a key point at that area as well, which is this clear FVG on the 4-hour time frame, which is also if we see on the daily, which is also the key rejection level. So this is from October as well, sorry, November as well for December. And when analyzing this month, we will consider that. So every month to month, we have to change what our approach based on the different situations that are being thrown upon us. Obviously, when coming into December, we also need a support. And what would that support be? That support would be here, the original breakout level from October. Uh, so this is the area, and that's where we saw the breakout as well, and that's why we saw the December support as well. And this is what happened. This part, all this thing, we can analyze even before we start the December month, and that's something that we have tried. That's something that we have tried as well, and we can see the value area, the volume nodes as well, where volume is there. This is the volume node, and that's where the support is. This is the volume node. That's where the support is. That's the key level. That's the point of control here as well. Again, this is the value area low. That's where we see the high volume node. So everything corresponds to that. And when we come into a month, we can have a plan for that month as a whole. For example, even if we go back way back, and when we are analyzing the start of, let's say, uh, start of November, we know this breakout has happened. We have support at the breakout level at 153. Uh, uh, and if price further breaks down, we have support levels that are supporting the price. Sorry, that are supporting the price across other levels as well. So this is 152, another support. We have further support around around this key 147 low level, and if we look at this area as well, we have key support around 150, 149 as well. Obviously, volume is not backing that because it totally gapped up here. Uh, but we know that's a support level because it's confirmed here, it's broken out here, it's confirmed again here. And when we start November, that's what we know. Now, how do we execute that knowledge? That was the question that was being asked for us. So there are many things that can be done, and I have looked into many things, uh, from moving averages uh, to uh, doing RSI crossover, to doing something with MACD, to doing uh, something with other other patterns, other trend signals that are there, that many indicators which are generally used by different people, from Bollinger Bands to channels to normal momentum strategies, to parabolic stop and reverse, to stochastic, to to uh, Keltner channel, to Ichimoku cloud. All those things today I have gone through. Also the chart patterns as well, like your triangle patterns, double top, double bottoms, specific candlestick patterns as well. For example, your uh, candles, sorry, like the engulfing candles, the well-placed dojis, like your evening stars, like evening doji star, or gravestone dojis, which are generally known for reversal type of candles, tweezer tops, uh, many other types of hammers, inverted hammers, all those kind of things I have gone through, and I have seen if they are working. I have tried to underline the consistency of their the effect, which is not very good. The only thing that I think came closer was MA crosses across different time frames. But the problem with MA crosses is there are a lot of time frames and there are a lot of MAs. Some people use 916, 921, 2150, 5100, 5200, uh, uh, 21200, 2150, like like even some people use 5 and 14 for quick get in and get out kind of thing, momentum shifting. So that was the issue that I found to be consistency, and making it less complex, because EN pairs are very aggressive pairs. EN pairs are not slow pairs that are going to stall, or that is going to do these sort of things that drags the trade, and that kind of slows the market momentum. And so yeah, I never found the consistency in any of those. So all those strategies that I spoke of, from Bollinger Band to Kendall Channel, parabolic stop and reverse, many other things, Ichimoku, whatever we can call it, candlestick pattern, chart patterns, they are good to have, but they are not consistent enough to follow consistently. Uh, and obviously, as I mentioned, MAs came close, and MAs definitely work. Moving averages definitely work. But the task at our hand was to make it very less complicated. Now that, let's say, we are coming into November, this is us coming into November. We don't know what is going to be printed here. And at the start of the month, we have these levels. What are these levels? We have our high of the month. We have our support of the month. Obviously, this is the sorry, this is the TPO of the month of October, and as we can see, this is the value area high of the month of October, and that's our support. So essentially, this is the support that we are trading, 153.2. So that's what our entry on the long side is. And because we are above the value area highs, we are not thinking about shorts at the moment. We will only think about shorts when the market breaks below this area. And why is that? We will discuss as well. Why is that we are not thinking about shorts? We cannot think about shorts at a point like this, because it is trending too much. It is not enough risk to reward on the downside at the moment. What we need is price to stabilize, and to stabilize it has to find support, because it cannot find resistance, as it is almost in a price discovery. Obviously, it's not price discovery because USD JPY was higher, but it's almost like that because the chart has not traded in these levels for a long time. So that's the question. Now, how do we execute that? What I found was that the most easiest and like way to track this and make it very, very less complicated was to go back to something that we had way back in the beginning, is super trend. So how do we do that? Do we take here? No, obviously not. We wait for the price to go back to our support. We don't do anything but until it goes back to our support. And we wait for that. This is start of November. And by the what this is 5th of November, we are getting back to that support that we wanted to trade. So that's where things are finally getting into action. So we have taken the support, but we are not still green. We are not still bullish. It's still trending down. What we need to confirm is the trend here. So this is the part where we have found execution to be really difficult. At this point, what we would generally discuss is the fact that what if it goes below? What if is this support confirmed? Because this is only a 30-minute candle. How do we know that? Is the support confirmed? Essentially, after all the discussions, we don't know that. So that's where this breakout comes into play. At this breakout, after this breakout, this is something that confirms our trade. This area becomes our entry zone. So whatever we do, uh, this is our entry zone, and we can set this $40 40 pip SL and just rest on the trade. It will not make life complicated, and it will not make any issues and all that. Obviously, we get 80 pips over the course of the next 12 to 9 hours. We can exit, or we can take partials and keep rest of it, which is obviously still being exited at profit, even if we exit at the super trend break almost a day later. A day later, when it is breaking down, there's still 12, 13 pips in profit. So that should be fine. In my opinion, that's a fine kind of trade because we are already getting 80 pips before. Now we are again testing that level. We are trying to break below. We are testing that level. That remains our level for the rest of the month. So that support level remains. And on the Monday, so this is Saturday actually. On the Saturday, at the close of the day, it's giving us a breakout again. Obviously, this is Friday. The breakout happened here. It's not yielding the best of results and possibly generating a loss. We can exit in profit, but I think most likely scenario here would be that we make a small loss, 10-15 pip loss, but we are still above the key level. And at the close of Saturday, it is generating that signal again. And if we had that entry mark, and if someone is there, they're getting an opportunity here to enter that breakout level uh, in the Asian session on Monday, and they can set the SL very easily at this point, which is 30 pips again, and again target the high level and just be at peace without having to monitor this day in day out and get what here get 96 pips again. Then again, it's breaking out here, but it's not our support level, but instead this resistance level. Below the resistance, we do not buy that. We do not buy that. When we buy is after this breakout. So this was our resistance that was being formed. We are already in mid of November. We have a clear high formed here, which has been tested once, twice, thrice, 4 times, fifth time, and on the 6th time it breaks. When it breaks, we do not take the breakout. We do not take this breakout because it's at our low, it's in the mid of this and towards the resistance. But when this breakout happens and we get a next breakout here, that's another of our entry. Even if that loses, so that's our exit. Even if that loses 50 pips, that's fine because we are targeting something that is much higher. We are targeting almost 120, 130 pips. I know this is not working in this case, but that's something that's a good trade to make. That's a good risk reward trade. So not all the trades are going to work, but in this case, this is a very good example of trying something. Now, why is that? We will get here. on the next attempt. So we rejected here and we have broken out here, and the next trade becomes here. Our stop is below the thing, which is again 50 pips, and we will understand why this was a good earlier loss was a good loss to take, because the next opportunity is 250 pips. So we were essentially targeting the same move here, which did not work, but on the second attempt, it worked. So this makes our job very less complicated, and it's running for, let's say this is Tuesday 2 p.m. Istanbul to Thursday morning Istanbul. So it's running for 2 days. We don't have a headache because we have a hard stop. We have a clear SL, we have a clear plan, we have a clear objective of trading, where we want to exit our trade, where we want to get in on our trade, etc., etc. Obviously, we are not doing anything around these levels, and why we will discuss. So we don't have a resistance level here because we are not in trading areas for a long time. So let's say if we look at the daily chart, we'll see we are not in good trading areas, and these are not good levels to trade from. And yeah, that's about it. Then we wait for the next opportunity, if buying opportunity if possible. Obviously, we're not going to get buying opportunities because the price is not going to go back to 155, all that low level for the rest of the month, and we'll just not have trades for the end part of November. We'll not have trades uh, because of price action. Yeah, obviously, when the next month comes at the start of December, we have new value area highs and value area lows. So value area highs at 156.2026 and value area lows at 152.9, which is not going to be tested. We understand that, and it's going to be tested maybe later in the month, but for the start of the month, it's not going to be tested. The clear level is this resistance. So let's remove the October levels and start with the clear. So obviously we have marked this fair value gap resistance as well at the start of the month. That is the only thing that is standing. Uh, let's do something else for that. We can do a green box like this. Yeah. So that's a clear level of resistance for us. And yeah, at the start of the month, we have the value area highs and lows. At the start of the month, we have resistance and support levels. At the start of the month, we have everything that we need, and we are waiting for sells. Obviously, we have the fundamental picture of BOG hike as well. So everything that is needed, we have, and we are planning to execute. So we wait. Obviously, this is late in November itself, so we wait for that uh, uh, movement to take us to our resistance levels, which is happening here. This is tested, and we are rejecting. And when this breakdown happens, if we short with this stop as RSL, which is again 50 pips, so that's something that will have the general stop loss. Targets will be around 50 pips for this. This is giving us around 60-70 cents before breakdown, and 120 as a whole. But there is this a bit of noise here, but yeah, that can happen sometimes. So again, we wait and wait and wait for the right kind of short setup and for this level to be tested and rejected, and it does not do that. It goes back to that level, and in this case, if we take this one, again, we are having 50 pips of SL above that 4-hour FVG, and if we target 100 pips or so, or 70-80 pips, that's a very easy to execute approach as well. It eventually goes to almost 165, 160 pips lower, but it's not something that is very bad. Again, this morning, if someone is at the desk, they can see that this is existing at that rejection level that we saw on Friday as well. And when this is breaking down, we can, if we put the high, it's slightly more than 50 pips, I think 52, 57, 55 pips, the SL, but it's generating that 70 pips and maybe more as well. I think it can generate 120 pips. So that is the thing that is making the trading a lot less complicated. And from the start of the month, we will know what we had to do, and maybe 2 or 3 times or 4 times we will have the execution uh, delivered to us, and also the execution metric delivered to us as well. It's very smooth, no complication. We can hold the trades. We can be assured on what we are doing without having all these like back and forth discussions. And yeah, that will help us make this desk a much better. So levels, everyone is giving us. Whoever comes in is giving us levels. Any analyst is coming in, they can give us levels. But the execution is the most important thing, and that's the thing we have had lacking. And this, I think, could totally solve that. Obviously, this also brings a clear risk metric, and that risk will remain. But I think this is it for us to execute.